Hello. What's up, guys? Today we're going to be doing a breakdown on the top gainers of 6526 stock market top gainers. We're going to be looking at probably about 6 plays, 7, maybe even 10 plays, breaking them down, seeing the patterns, gonna review them, see what might be hard to read, see any continuations that we could maybe see for Monday, and then just try to sharpen our sword a little bit. Okay, let's get this going. Nice. Okay, let me just make sure this OBS is, yeah, okay, we're good. And then, okay, let's start. Let's do it up. So, for these breakdowns, we're just gonna do one chart, do one at a time. And with stocks, um, I like to I like to start with bigger time frames, and then you can shrink down and slowly get to smaller time frames. Like if you're using the 1 second chart, a 5 second, 15 second chart, it can get confusing, you know. So start with a big timeline, and then what we'll do is we'll find the big patterns and then slowly start um, getting to where the patterns are smaller, to where you can make a more accurate entry, a more favorable entry, and an entry that's still safe, you know, still recognizable and still approachable. So we'll start with the day. We'll start with the day chart. So there's three time frames of trading. You have the pre-market, you have the intraday, and you have the after hours. So pre-market goes from 4 a.m. to 9:30 p.m. 9:30 a.m. and then intraday is 9:30 a.m. to 4 p.m. After hours 4 p.m. to 8. So I believe it's 16 hours of trading hours, 16 trading hours in the day for Monday through Friday. Saturday and Sunday it's off. So here we go. Let's see what we had for this day, Friday. This is all the data. We'll start with the top one, and then we'll do probably, we might be able to just do the entire base list of the top gainers. I don't love these plus 20s, but like there's so much stuff that you could see. The first one will be a good one. So let's start with the 4 hour chart. Let's do the day chart. Let's do the day chart, okay? So what we see on the day chart is we went from 25 cents to 85 cents, okay? And that amounts to 194%, and we can see that right here in the top. This stock, we're going to pull up the key statistics. The big important numbers for you to be looking at are volume, free float market cap, and free float. So float is the available shares to trade, okay? Volume is the amount of shares being traded, okay? And the free float market cap is the market cap of all the available shares to trade. Okay, market cap is different. See, this is 17 million free float market cap, but it's a 61 million market cap, okay? So the bigger a stock is, right, the more money it takes to move to a degree. There's inefficiencies, but the big pattern is the heavier the stock, the harder it is to move. That's why you'll see Nvidia, a $3 trillion company, only move about 5%, you know, a week, or I don't exactly know the numbers, but it's not going to be moving 100% anytime soon, not in a day, right? So if I'm trying to do float math about rotations and understanding like where and how much volume we could eventually start trading, and based on news or based on whatever, I need to be understanding that the market cap is not the same as the free float market cap. So, and then as price goes up, because all market cap is the price of the share multiplied by the amount of shares, gets you your valuation of your company, right? Very simple. Price of share, amount of shares, that's the market capitalization. So if you start at $1 and you're at a 10 million market cap, but then traders push the stock to $2, now it's at a $20 million market cap because it doubled. You know, not necessarily meaning $20 million or $10 million had to go into the stock to push it up like that. But let's get into this breakdown. So we see 20 million free float. Okay, when trading stocks, especially top gainers, especially intraday stuff, especially pre-market, two things that you could really almost make a living off of, it would be news and volume. Okay, this stock the day before, or let's say 2 days before, had traded 54,000 shares across 16 hours of trading activity. The past month saw it just kind of fizzling out, really not moving at all. You know, 150 to 3 over 30 days. No one's going to be that patient. No one wants to trade that, and it's kind of just weird trading, you know. But here's our day. 92 million shares in 16 hours. If that's not If you can't notice a volume discrepancy between this and that, then you should give up trading. Okay, you can't notice a discrepancy between 92 million and 54K in a day, then you should give up trading. Um, let's now move into, so 92 million shares traded. This is an interesting number. Let's see, 20 million. So we rotated 92 divided by 20. 92 divided by 20, 4.6 times. You rotated 4.6 times. So that means your entire flow, every single share, was traded 4.6 times, right? That's insane participation. Let's see what not insane participation looks like with 54K. So it would be, it would be 20 million divided by 54K, which is like 0.05, I think. So, 0.05 divided by 20. Yeah. Yeah. Like 2% of your flow, less than, not even 2%, like literally almost 1/5 of 2%, right? So, participation is going to be your key. You're going to see that with all these stocks. Participation is going to be the biggest factor. Let's move to the 4-hour chart, okay? We're moving in. Okay, so down here we have time of day 8, 20, 9:30, 13:30, 16, and 20. Okay, so these are military times. These are 4-hour chunks, right? So 8, this 8 o'clock one right here, see 8 at the bottom here, it means this amount of time. So it means 4 a.m. to 8 p.m. Okay, 9:30 means 8 p.m. or a.m. My bad, 4 a.m. to 8 a.m. And then 8 a.m. to 9:30 because intraday starts. Now we have 9:30 to 13:30, which is military time, so 1:30. And then we have 1:30 to 4 o'clock, 16. And then we have 16 to 20, which is 4 to 8, 4 p.m. to 8 p.m. Okay, so what happens? What happens? What happens? The first thing we're going to look at, the first thing is going to be news. Let's look at the news. Okay, so this stock moved on 6/5/26. We look here. I'm not sure if my thing's in the way. This says 1 day ago, 2 days ago. So, and then we look down. This is 13. Like, dude, there is no fucking news on this stock. No news. Okay. So it's important to understand what kind of stock is it. It's a machinery, tools, heavy vehicles, and trains and ships stock. Okay. They provide zero emission solutions focused on developing commercializations of heavy duty new energy vehicles, trucks, and e-fuel solutions. So, a company that is focused on EV vehicles for machineries, tools, and commercialized heavy duty vehicles. I mean, that could be that's a very important industry currently, right? If this stock was like a newspaper stock, you'd be like, all right, well, we'll give us a fucking shit. It's a fucking newspaper stock, right? Okay, let's see what we get. 218,000 shares traded in 4 hours. You know, not the biggest thing. 7% differential. This could be a kickstart, but I'm not sure many people are going to see that 7%. Now we see 191% on 67 million volume within 4 hours, going from, this is at 16, so it went from 1330 to 16. So 130 to 4, you could have made 191% had you entered at the very lowest. Actually, could have made a little more because it went higher than that. This number represents the close of the candle, not the peak. We actually see the high here at 107 and the close of 84. So we actually more money we could have taken from this. Let's see though, shorter time frame. Okay, now still 2-hour move. A 2-hour move gave you 141%. Okay, on a $17 million company, 20 million free float, with an idea that you can trade either about 1% of the free float, right? You have a 1% stake or more if but 1% is safe. You can safely trade 1%. So if 20 million shares, we have 20 million shares, we could trade 1% of those shares. So we could trade 200,000 shares at, say we pick up at 38 cents times 0.38. So you could have had $76,000 position. $76,000 position. Okay, but then again, I don't know. Fitting in 200,000 shares out of nowhere could be difficult, but still, realistically, it's only 1%. 76,000 shares times, so $76,000 worth of shares is what you could have bought by yourself as like a retail trader. Times 1.41, 141%. You know, you make fucking $107,000. $107,000 plus your 76K. So now your account is $183,000. Pretty crazy. So as a small trader, you have to completely worry about scaling. You know, it's like the scaling is going to be there, dude. Like unless you're looking to make $1 billion fucking dollars, like you're not going to do that in a day. You know, so you have to fucking worry about it. What do we see? 2 hours, we go from 28 cents to 93 cents high and a close of 70. The next 2 hours, we see, actually, this is 15:30, as we can note, to 16. So the 2 hours, the 4 hour and the 2 hour, I'm not sure if I don't think the 1 hour needs to. Besides for 9:30, they will, they'll only go to, so the intraday session will be closed in, the pre-market session will be closed in, and the after hour section will be closed in. So we'll see for here, for the 2 hour, we get 16 to 18 and then 18 to 20. But for the intraday, we have to get, in the pre-market, we have to go 8 to 9:30, which is only an hour and a half. And now since we're at 9:30, we have to flip. So the 2 hour chart's not going to show a complete 2 hours. It's going to show 15:30 to 16. Okay, that's 13:30 to 15:30. This is 15:30 to 16. So this is only 30 minutes. Only 30 minutes. We traded another 42 million volume. 42 million volume, and we moved 20% up, but actually we moved to a high of 107. So starting from an open at 68, we see O at the top left here underneath the name of the company. O as open as 68 cents, high of 107, and a close at 84. Okay, so 68 to 84 is a very good profit, and a high of 107, that's almost 100%. That's close to 100%. So even though it closed at 20%, it's close almost to 100%. But interestingly enough, we'll see this a lot. You trade 24 million shares. I'm like, okay, we move 141% on 24 million. Okay, but the next, well, also not even really 100%, 141% close, 141% close, right? And a potential from 28 to a high of 93 would have been like almost a 3x. That would have been almost 300%, right? So 300% close at 141 on 24 million volume. Okay, so why do we trade 42 million volume and only move 20%? Technically, almost 100%. Why do we move less? So the idea is crowding, right? When you buy a stock, when you buy a position, the whole idea is people are going to buy on top of you. Okay? So every stock, to a degree, is like a snake eating its own tail, right? It's people buying on top of each other and then waiting for someone else to buy on top of them just to sell into them, right? That's the game. From many different viewpoints, you can see it as cynical, you can see it as selfish, but you could also see it as an extreme force of teamwork. It's a very team-oriented game, and a lot of people think it's a very individual game because you trade and you're the one who's pressing the buttons, but the idea is when you're trading, you're looking at what the market is doing. Like what is everyone doing? And everyone has the same perception of what's going to happen, right? Or everyone has a perception of what's going to happen, and people make mistakes. The vast majority perception is what truly matters, right? And then the most efficient areas to enter are going to be the most efficient. And we're going to be looking at these efficient areas and what an efficient area looks like and how to capitalize on these areas, okay? On the 2 hour chart, harder to trade, but we see 141% extension on 24 million, and then we close at 70. So we close pretty close to our highs, pretty close to our high. Losing only about, let's see, how much do we lose actually? Get the trend line out. So we go to 220. Well, I'm not sure if that's exactly at 28. It's hard to exactly say. It maybe not be at 28. Say right there. So we go to 240%. Down to 152%, right? 140, 152. So we lose 100%, but we moved up 200%. So we lose from, what do we do? Lose 100%, but we're still up 150, right? That allows a continuation for another huge amount of volume. And then what we see, though, is when we go up in price, right? From this here to this, even on the 2 hour, you have to trade more volume. You have to trade more volume for a solid breakout. And what happens the next candle, the next 2 hours? Well, we go into after hours, so a lot of people get out of the game. A lot of people look away from the stocks, and the stock at the moment, even now at 53, it's up 194%. So at 85, we were already looking at it. Even at 108, it's up 250%, 300%. Like, who wants to buy on top of something that's already traded 3x, 4x its float, is up 250% and has no fucking news on the day and going into after hours. It's very contextual, right? So, big break, controlled push in a heavy rotation push that doesn't really get us exactly the same benefit that we had before. More people are trapped, and then the next candle, we lose a ton of volume. We lose all of our volume, and then we just settle down, right? So, 10 million though, negative 34%. So we lost basically 4x of our volume. We went from 40 to 10, right? So 24 to 40 to 10, okay? And now to 802, now looking to go into pre-market. So let's go to the 1 hour chart. 1 hour chart, we see it a little more clearly. We get 6.7% movement, 60,000. A little bit of a build, cool out, hard hit, 24,142. Happened in an hour. Didn't happen in 2 hours, happened in 1 hour. Okay, next hour, same thing. Let's move to the 30-minute chart. 30-minute chart. What do we see? Okay, now we're seeing something here, okay? We had a level at 26. Okay, that's your bottom. You right? You trade 342 shares at the price of $26, okay? Or 26 cents. This implies that you're not going to sell much harder into this if it hits volume. If 300,000 shares get traded and you already traded only 300 shares at 26 cents, you're not going to push. No one's going to short from fucking 26 cents. Who's shorting this, right? It's a dead play. There's no volume. You can't short until there's a movement, right? So you don't have to worry about the short at all. What you do have to worry about is a precise entry. 30-minute chart, it can be difficult, okay? You're looking at top gainers on the day. Everything's already up. You're coming into hour, you're into 15 on the day. So 15, which is 3 p.m. 3 p.m. It moves up 7% in 30 minutes. I don't think you're going to see that on the charts. And there's no news either. So it's like, you might not see that. Okay? But you will see this. You will see this. 125% on 24 million volume out of nowhere. You'll see that. That should pop up. If you check your top gainers every 30 minutes, it's not that fucking hard. Just literally go here, click this, and then you see the refresh button. You don't even have to refresh it. Refresh it for yourself every time you click on it, and you'll see that it's coming up out of nowhere. It's up 100%. It'll be somewhere here, somewhere up here, right? It'll be there. Okay, now let's move to a smaller time frame. Okay, 20-minute chart looks the fucking same, right? Basically, what we see is 13 million shares for 93%. Okay, pretty efficient. I think the idea is crowding, right? A crowded stock that doesn't move forward, doesn't move in price, it can get difficult, right? You need data to understand what crowding is, right? Like, I've tracked data, and you can see that some companies can rotate up to 140 times in a day. 140 times in a day. So you need information onto how they actually rotate and what rotation is available, what is appropriate. So on a 20 million float, you trade 13 million shares, okay? Doesn't mean 13 million people, 13 million shares were bought. It means 13 million shares were circulated. So 13 million is about 13 out of 20. I'm not sure exactly what that is. 13 times 5 is 65%. So you can move 93% on 65% of your float, okay? So pretty good rotation. So that means we're getting value in an inverse ratio to how many shares we're trading, right? Like, but it's enough value, it's enough shares traded to where it's a concrete move, right? You can't trade 5,000 shares on a $20 million float and be like, if it moves, but if it moves 13%, then you get to be careful, right? But like, we see here that we have a very, like a ton of float. 65% of your float was traded, 93% movement, okay? It's a big deal. It's a very big deal. And the next 20 minutes, like it's 20 minutes, like a blink and you miss it. Go to the bathroom, scroll on TikTok, smoke a little weed, and you fucking missed it. You missed the entire play, right? The next 20 minutes, before after hours even happens, we go another 44% on 20 million. So more volume, right? The next candle, 32 million fucking volume. So we traded more volume than the previous candle. We moved up for sure. We did go up because look at the thing. We go up to 108. So still following our rule, but becomes inefficient. Context, okay? 93% plus 44% is not 140. I think it might be 140 actually. Is it 140 or 196? It's weird how the percentages kind of scale. 100, but that was to the top actually, so it might not even be from there. And plus, this 93% isn't including the top. 180%, right? It's weird. It's weird how the math works. But 180%, 180%, and you just traded 150% of your float, 1.5 times your float. You're heading into after hours, and then you trade another 1.5x your float on a 20 million float on a $17 million company. So after all this, with no news, do we think we're going to move this stock from 85 cents to another 160? Probably fucking not. We're probably going to settle down, right? Let's move into a 10-minute chart. Very interesting. Very interesting. What do we see? Okay. Our first 10 minutes is going to be some of the most important things that you see in the game. First 10 minutes, we see 48% on 2.7 million volume. 48% on 2.7 million volume. Out of 20 million shares, we traded about 3 out of 20, which is 15%, and moved 50%. Very efficient. It seems inefficient, but it's efficient because that means we're not too crowded. We have more space for people to get in, and we're giving people are making money. We're making money, right? We're moving forward. That's very important. We are moving forward. So the next 10 minutes, boom, more volume. We 5x our volume and we gain 30%, okay? And notice, too, a low of 38. So we moved down to 38 within this movement. We opened at 60, got a low of 38. People picked that back up like fucking candy. Picked it up like candy. And then we push out more volume, less percentage, a big hit, right? But then, I guess, it's hard to say because you push so hard. But the idea of stocks is breathing, right? Like, you take a breath, and you think green bars and buying volume is like oxygen. Stocks are like flames. Buying volume is like oxygen. Selling volume is like carbon dioxide. So the flame needs to take a breath, right? It needs to buy in, and then it's going to settle, and then it's going to push back in again. But you need that oxygen. You need that rotation. You need that perception of more money to be made in order to continue your movement. Or else there's going to be no opportunity, and anyone who is in the play is going to sell. Okay? So more volume, about the same volume, not a terrible dip off, not enough to be like, I should get away from it. And then your huge rotation, 21 million volume, and only a 7% gain. So why are we moving 2 million volume up 48%? And then 20 million volume up 7%. That doesn't make any sense. Well, it does, because now you're crowded. You're already up 200%. Everyone wants to get out. We're going to rotate out of this thing. That's your signal. Now it's time to get out. And you have plenty of time. This is on the 10-minute chart. We're going to get down to the 15-second and the 5-second chart. This is plenty of time. You have all the time in the world to make these decisions, okay? You just have to be efficient. You have to be structured. You have to be emotionless, basically. You have to just be aware of what's happening. Because the only time you have an emotion, and a negative emotion, is because your ego was attacked because you wanted to be right and you weren't right. So getting away from your ego and just understanding that what happens is going to happen, and I need to adapt to the market, and the market will show you the same thing every time, right? Okay, let's see. 11 million, 5 million, 1 million, 1.7 million, 700K, 700K, 300K, set 170, 105. That's not a buying push, right? We're just slowly losing our volume, slowly losing our volume, slowly losing our volume. Here, though, we push in a little bit, 10%, 233, respecting this 53 level, and then now coming down, sinking back to this 53 level, right? We made a high, 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 made a low, made a low, made a low, try to fight the low, made another low, try to fight that low, pushed not to a new low, but still sinking, trying to do something a little bit. Maybe some people are getting out, maybe some shorts are covering, right? Push down, push down, push down, push down. Now to 82K. Now 85K in the 10-minute compared to 21 million in the 10-minute shows you that you're cooling off, okay? So eventually, maybe this thing will get to, now it's trading 25K, at a low about 25K now in the last 10 minutes. So very little volume, very little attention. This thing could push back to 108 in the pre-market of Monday, though likelihood of it to try to keep following down and then finding a safe space. And especially when you don't have a lot of news, this isn't something that, is exactly something you really care about until it breaks out, until we see that new participation, until we see a movement, until there's something there to be excited about, okay? So, hard push, 48% in 10 minutes. Very important. Everyone's going to, traders are like fucking, they're like feral animals. Like if they can smell blood, they're gonna punch onto that shit. Especially if it's organized, if it's streamlined, if it's an efficient play, right? They're gonna get into it quick, right? That's why we see that 48% was gone. Like if you miss that first 10 minutes, you're not getting any. You're barely. Like, it'll come back. It'll test its highs. It'll test its previous high, but you're gonna miss that 40%, and then the next 10 minutes, if you don't pull the trigger, if you don't know what you're looking at, you're gonna miss that 30%. The next 10 minutes, you're like, oh, I don't know, 16%. Oh, like, oh, maybe it's trading too much volume. Maybe we're not doing what we're supposed to be doing. You don't know what the fuck you're doing. You're gonna miss that 16%. Then boom, 24%. You miss that, and then now by that time you're like, oh, now it's gotta go up. It doesn't. It does not have to go up. It doesn't have to do fucking shit. What's going to happen is going to be based on a series of mathematical equations, right? It's a truly a very mathematical game. Very structural game. It's not rocket science, but it's structure. It's very much structure. It's very much perception. It's human psychology. Okay, that means it's manipulatable, right? It's understandable. Okay, it's not quantum physics. This is understandable stuff. Okay, like like it's understandable. I'm telling you. Okay, let's move to the 5 minute chart. The more depth you get, the more information you get. The more information you get, the better you can make an opportunity happen. Okay, 17% in 156,000 volume. Okay, the beauty of this play is this. This is the beauty of the play. Okay, the idea behind this stuff is that no one cares. Okay, all of this past from 526 to here, the past week or so has done nothing. No one's traded it. So that means you don't have a whole lot of volume, a whole lot of bag holders who have more, who can push weight down into the stock, right? Like if a stock the week before moved up 100% and I was bought the top and I'm an idiot, or I'm not an idiot, but I just I messed up, I bought at the top, then a lot of times what can happen is these trades can push back up towards that previous level. And then if they do, you're going to have a lot of selling weight. There's going to be more selling weight than you would think to appear. So this stock not having anything happen at all for the past week allows this thing to be explosive. Okay, let's see what we see. 5%, 17%, 156,000. So 256,000. We're trading 1% of our float. 1% of our float for 23% price gain. That's a ratio that's very attractive. Very attractive. The next 5 minutes, another 26%. And check this out, from 156 on the 5 to 2.5 million. 2.5 million, okay? If this does not scream participation, then get out of trading stocks, okay? We went from 154 to 2.5 million, right? So I don't even, what's that, 2.5 divided by 1.5 over 154K, that's more than a 10x, right? Almost a 20x. So let's say a 15x in volume and 26% increase. And not to include, have a 20 million float, we have room to grow. And we're also still in intraday. And people have missed plays from earlier in the day, and with the PTD rule getting switched off, there's more trading availability than ever, right? Anyone can trade and recycle their margin, recycle their buying power, so the market will be active, okay? This is what we're seeing. The next 5 minutes, 3 million volume on a negative 3%. Now, what we said earlier, you have to trade more volume, and you have to be efficient with your volume, right? To move upwards. But then here, we get that same compression, but it's contextual, right? Like this compression is happening after a 26% move. This compression is happening after a 194% move, a 200% move, okay? It's very contextual, it's different. Every spot in the trade is based on the context of what happened before, okay? So opportunity is going to be based on context every time. Context of participation, context of news, context of time of day, and context of continuation. Okay, what's going to be so 3%? What this is? What is this? What is this 3% compression? If we're gonna go to 105 anyways, why the fuck are we compressing at 3%? Why are we compressing here? You know, an hour or two before the play's over, right? This compression is a lot of things. What it is, it's the market selling. Okay, so 17%, 26%. That's about 48%, like we saw earlier, right? Even from here, 65%. If I made 65% on $1,000 or $10,000 or $20,000 or whatever amount of money, you best be fucking sure I'm going to take partials or even sell the entire fucking thing, right? So that's what you're getting. But for 3 million shares to only move down 3%, moved a little bit farther down than that, but the idea of 3% close, it's very healthy because now we've just proved we can keep our volume active, we can trade more volume, we just compressed, people rotated out of the stock, allowing fresh buyers to rotate in. So what's going to happen if everyone buys? So if say if 20 million shares, 100% were all bought at the same exact price. Everyone knows that these people are going to be selling later in the future, okay? So what you would need to do is have these people sell while new people get in. So when everyone was at that 25 level and now it went to 35, what's going to happen is these people are going to sell, create weight. So now people are in at 28, okay? So now at 28, now we can push to 38, okay? We can't go from 20 to 30 to 40 to 50 to 60 without an extreme reason, as in news, participation, as in opportunity. Usually what's going to happen is we're going to make a high, okay? We're going to settle to see where our previous low was or test our previous low, and then we're going to break our high. Retest that high, break our high, right? And that's the whole game. If you have a high that gets tested and it lows down, the stock's going to fade down, especially contextually, right? This is what we see. Look at this. Make a high, okay? Make another high. We break that high, okay? Make a low, okay? Testing our previous high. Testing our previous high. Look at this candle. It dripped down to this, almost towards this previous high, right? Push back up to it, okay? Break out of this high, okay? Push up, okay? Don't even need to test. Push up again. Now coming down to test this previous high. Doesn't even get close, or kind of gets close, a little bit close actually. And then, as this 832K, now we're allowed to get back in. Boom, 14%, 8 million, okay? Breaking this high, or you can see this high and see it as not being broken, okay? On the 5 minute, it looks like this high, but truthfully, it could be this high, okay? So push up again, now 13 million volume. Now we made a new high. Now we're gonna go test this previous level. Lose volume, compress, lose volume, compress, lose price and volume, compress, not compress, but lose price, literally just 13% down. And now we see we're approaching this previous high. What happens? We try to trade past this high, which traded 13 million with only 3 million. We try to get to it, we do, but we don't break it. We don't get up higher. There's no reason, all right? Majority of the market is getting out right now. Okay, they get out. Any scalpers, quick players, you could have gotten that, but majority of the market, the smart money is moving out of this play, right? The early money is moving out. Everyone's moving out. Moving out. We test this high, we test this low, we test this previous high right here, and we lose it. Okay? Now, what we're going to be doing is the same thing the inverse way. And I have trouble seeing this. It is so interesting that it's hard to see. But basically what you see is you have a previous high, right? Which for sellers, for the people who are short selling, because you may see this as 282%, but a short seller sees this as 50%. Okay, you made 50%. It looks like a negative, and it is for the buyers. For the sellers, that's a 51% move. Okay, 4.6 million, and look what we said. Like on 76, would you like to make 50% on $76,000? 1% of the float? Yeah, of course you would. You would love to make 34K in less than an hour. Anyone would. Or in like 4 hours. 36K in 4 hours. That's someone's yearly fucking salary. Okay? Yearly salary. Okay? So, what's going to happen is we're going to make a low, test the low. Okay? Now, if we have less volume, or if you have selling volume, to make a new low. okay, and test the low. Can't test it, push down. Now we're facing, this is our previous low. We're trying to break it, trying to break it, trying to break it, trying to break it. Can't. Make a new low. Okay, now this is your new low. Now you have, this is what the buyer is going to reclaim. Like when we had here, we come to this new high. Now we got to come down and test this high, right? We come down to here. Now we got to come down and test these previous lows. So come down, test this previous low. Works. Now not making a new low, but still losing volume, slowly settling, slowly settling, slowly settling, coming to test this low, test it, push down a little bit, we get it. But what's going to happen is as people rotate out and as there's no more participation, the stock's not going to move as quickly. It's going to move slow. It's going to move sideways, okay? The sideways movement is a description, it's a representation of a lack of participation, a lack of interest, and a settlement of structure, right? Like we're actually going to reach an equilibrium. Everything in the universe is trying to reach a state of equilibrium, okay? You don't, the gravity, like the idea of gravity, what goes up must come down, right? Or if a force is enacted into something, it must move, as in we have a shit ton of buying power, a shit ton of rotation. The stock can't do nothing. It can't fucking do nothing. It has to move up. It has to move up. Like if people are rotating in, it's gonna go up out of nowhere. Like especially like especially in a contextual idea, like in a contextual point in the earliness of the stage. Like if you push in with 10%, 20% of your float, after the past week, not even trading 20% of your float, like you're gonna do something. And what's happening within 5 minutes, that's opportunity, and that's something people are gonna get into, right? They're gonna want to be in there. They're gonna want to make money, right? So eventually, you're gonna lose that volume. You're gonna lose that opportunity. You're gonna lose that edge, and you're gonna slowly settle down. Now the shorts are making money the entire way down if you had the correct entry, right? So that's what we're seeing. We're seeing these lows be created, previous low being tested, rejected, now looking to make a new low, okay? Still settling on our volume. Let's move to the 3-minute chart. Okay, this 3-minute chart is a beauty. Okay, 3-minute charts, I like the mix of a 30-minute, a 4-hour, a day, and then a 5-minute, 10-minute. I like every single time frame. Use every single time frame. And if you get confused, about what you're looking at, zoom out. Zoom the fuck out, okay? Trading is a game of making the right decision, okay? And it's a game that you have to really understand. You're not a robot. You're not going to make, you're going to miss almost every play. You're going to miss a lot of the plays, okay? You're going to miss them. And you're going to, but you just always remember, like, you're not going to get to $1 million off of one trade. You're just not. It's going to be a death by 1,000 cuts, right? Like, slowly, efficiently, smartly, okay? If you have a 50% win rate, you don't even want to have a $700,000 account, because the chances are, like, if you make 700K in a day, you're just going to lose it the next trade. So you really want to be efficient with your entries and with your exits and with your awareness, okay? And with your emotions. You need to be efficient with your emotions, your awareness, and your ideas, okay? And why is this play an efficient play? Okay, and remember, when we're looking at these trades, we're not going to see the whole picture immediately. We're not. We're going to have a couple base rules to follow. Okay, so what we're going to see is clear emptiness, hard push, contraction, hard push again, hard push again, hard push again, contraction, hard push again, contraction, hard push again. Not even as hard of a push though. Now starting to test these previous highs and slowly leaking out. Slowly leaking out. Can't push past, losing your volume, settling down. Now going to test this low. Can't do anything at all. Trading no volume at all comparatively to what you were trading. Like if it takes 4.3 million shares to move 27%, are we going to move 27% from the price of 64 trading only 500,000 shares in the after hours? Probably fucking not. Especially after you're already up 200% on the day. You're probably not going to fucking move 27% from this position, okay? Slowly leaking out. So, what we're seeing here, boom, there's your compression. Do you buy now? This is going to be the question every time. Do you buy now? Buy now or sell now? Do I buy now or sell? Well, what I'm looking for is a retest of our previous highs and an influx of more volume. So, boom, retest of our previous highs, volume confirmation. Now we're still trading as much volume. More volume again, another compression, pushing past from our previous high, actually gaining a little bit of money from our close of our last candle, and now breaking out. Do I sell now? Do I buy now? What do I think to myself? I say, okay, now what we're going to see, 4 million in 5 minutes, so we're trading 4 million in 5 minutes, meaning 25% of your float in 5 minutes. Okay? 20 on track to trade one float every 20 minutes. Okay? That's pretty heavy. It's a lot of participation from especially trading one volume in the 3 minute. This is on the 3 minute actually. So actually it's a little bit tighter than that. It's a little bit more volume. It's 25% in 3 minutes. So you're on track to move 100% in 12 minutes. Okay? So 100% float rotation in 12 minutes. Okay? So time is now. What you're going to be looking for is a retest. On the 3 minute, you can't see this, but we get that immediate break. Okay? Another immediate break. So you missed this. Do you sell here? You can, if you want to. Is it going to move up? There's high potential. There's high potential, right? After only moving 27% on 4 million, right? 25% for 25%, and the market's very active. Pushed up again, now to 70. Controlled though, 16%, 5 million shares, okay? So it's starting, you already can start to see the discrepancies, right? Like more volume for less price increase. So what this means is we're slowly starting to get crowded. We're slowly starting to rotate more evenly, okay? But we know from this point we're still going to move another 100%, okay? So boom. Now we can move up price with less volume. This is very important. What this shows, it could be two things. This is an efficient price movement though. So 17% on 2.6 million volume. It's still very efficient. We're still efficiently trading. That means people are happy to get into the play, right? Even though we're coming from 26, coming from 29, realistically coming from 30, about 30, 40, right? Realistically, because that's where most of the volume, the kickstart volume is. That's where most of it is. Even, yeah, this 44 level is where most of the volume is. So we're about almost 100% up, but we're still rotating very efficiently, okay? This is what we see. Now we're going to look to test, actually make a new high, and looking to test this previous high here at 65. And we kind of get close to 67. Now here, have a low of about 66, 67, our previous high, and then we push up hard. 3 million volume for 20%, still pretty efficient. Compression, testing our previous high. And we actually dip below it. We dip below it, coming to, actually a little bit lower, around 75. Makes sense, it's more of a congested area. And then push up hard again. Not hard, but pushed up, okay? So 13% on 8 million volume. Now we're trading 50% of our float, almost, in 3 minutes, okay? So now we're getting fucking crowded. We were already a little bit crowded. Now we're getting crowded, okay? Boom, another 6 million volume, rotating to only move 0.05%. Or, yeah, like, you know, going to test our previous high. Testing it. Trying to come back to break our previous high. Can't break it. Testing again our previous high. Slumping it. Now losing volume. Testing our previous, and then once we break this previous high and we lose all of our volume, we do push back to 108. Can't break here. I can see a lot of shorts getting trapped here. A lot of shorts could have bought at 84. It rips to 108. Margin call, right? Possibly. So from 84 to 107, 108, that's about, what's that? 80 to 100 is 20 divided by 80. So 2 divided by 8, which is 1/4, so 25%. So you had shorted at 84 at this new break, you would have been down 25% in 3 minutes. You know, you would have lost 25% immediately in 3 minutes if you sold, if you covered, right? And even from here, we could see that. And a lot of people here also trying to rebuy this breakout, rebuy this test, but you know, you already traded all this volume. Like you're not gonna do that from there. Like, and we did the 4-hour chart. We got to see that we traded 24 million, then 42 million, so 80 million shares up to this point, right? So it's like after trading 80 million shares, like, you know, like if you need to trade more money to move up, then you're not going to trade another 80 million shares into after hours with no news. Like it's just uncommon. It doesn't make sense. It's not logical. Okay, let's move to the 2-minute. The 2-minute, ferocious Mr. 2-minute. Okay, it's still the same chart. Still the same chart, but it's a little more, it's a little bit more broken, right? Or at least like segmented, okay? Same thing. 11%, 272k, right? 1% float for 11% gain. Compression and 5%, 800%. Now from 200k, now 800k. Now we're seeing that, okay, if we stay in this trajectory, we stay doubling, tripling the amount of rotation we have, and we continue to slowly move up, then we can make good profit. Boom, that's that break. Everyone knew that. Everyone saw that. 1.4 million. Now we've almost doubled our share size and trading volume in this 2 minutes. On 2 minutes, 1.4 million in 2 minutes. Okay, some stocks. There's 8,700 stocks in the market, right? Like they're not gonna. Um, some of them don't even trade one rotation a day, right? This is trading almost one rotation every 12 minutes. Like what the fuck, right? That's participation. That's an asymmetrical idea, an asymmetrical position. So, boom, another million, 5%. What is this? It's negative 5%. People are selling. People are coming to retest this high. People don't want to buy the top of the breakout right now, right? Boom. Now now selling down again, but not even getting to our previous high and trading more volume, meaning we're rotating in and we're compression, right? And we get the confirmation of this internal we get I say rotating in as in buyers are rotating in. Okay, now we get the confirmation of that with the breakout, and people love it, right? Like, look, we go from 1 million to 1.5 to 1.7 on the break, meaning people love this and they wanted to move in. Okay, and you can see people get a little weird when it comes to buying breakouts, right? They're like, it's like we just moved up 17%. We're already up 67% on the whole day. Like, I don't know if we're going to keep going here. But what we're seeing, though, is we're seeing more volume. Okay. And it's 3 million. It's 30% of your flow. Okay. So, like, there's not as much to be worried about since you're trading so much of your flow. And, like, if you have a 5%, 3% risk, it's like if you have the right entry, you should be pretty stable at your position. This 46 level should be pretty stable. This 50 level should be pretty stable. And eventually, even this 58 level should be pretty fucking stable. Okay. And we see this stability and we see this in this drive to move forward. Okay. This drive to move forward eventually leads to everyone seeing this opportunity and everyone wanting to get in. Everyone wanted to make a little bit of money. And you don't need to make 100%, okay? You just need to understand why these trades move and where they go and what your best trade would have been, and what you could have made, It's like, that's what we're really looking at. Okay, now do we buy this breakout? That's a good question, You're up a lot of money. You're up a lot of money. And then what's going to happen here is we're going to see, I think we probably halt. We might halt sometime here. Like we only traded 500K. Usually that means a halt, right? That means an explosive move. And what happens is the SEC enacted halts to happen so that rookie traders or retail traders or traders who buy the top of the breakout don't maybe get completely fucked if they're wrong about their analysis. Like you don't want to get completely fucked in that idea. So what we'll see is 500,000, and then that's probably your halt because you don't just dip down that much volume out of nowhere if you're trading 4 million. That 4.5 million shares rotated still has to get out of the play, right? Eventually, like or or get rotated out of into. So it's like you're not just gonna dip 10x your volume unless maybe an offering is out, which is like when they just flood the market with shares and everyone gets fucked, So you get that halt, and from the halt, usually people buy immediately, right? But what we're looking at still is like, okay, I can buy this, but really what I want to see is a test of 61, even 64. Like I want to see safety. I want to understand that there's going to be people rotating into my position, and I'm not just buying this breakout willy-nilly. I want to see a structural confirmation, okay? And we're going to get that. 67, trading more volume, 2.6, 2.2 on a compression, high of 93, down to close of 70. So 93 to 70, that's 23 cents. 23 cents from 90, right? What's 2 divided by 9, right? Which is like still almost 25%. So you lost 25% of your price value. 25% of your price value. Is that a discount? Is that a discount? Yeah, it's a fucking discount. If you went to the goddamn store and everything was 25% off, you stock the fuck up, right? This is what we see. With even into the sell, we're stocking up, right? Testing our previous high. And now I guarantee you as soon, we're going to see this on 15-second start, at the 63 level, right? 1536, 63 level, we're going to see as soon as the 60 starts popping up a little bit, it's going to push. We get that. We get that compression back to our previous high as well. Try to test our low. Don't test it. Move more volume. And at this point, you're thinking to yourself, okay, we have to break this with an insane amount of volume. We need to move a lot of volume here. And we do. Now 7 million for 12%. Okay. 7.2 million shares rotated, which is about in 2 minutes, almost I don't want to just say almost. It's 7 out of 20, so 7 times 5 is fucking 35. 35% of your float in 2 minutes. Now if you want to move up, you'd have positive rotation into it. Usually more volume because more people are in the play. Can we really trade more than that with no news? Already up 200%? Probably not. So, is this a good buy? Probably not. Is it a good sell? Yeah, that'd be a good sell. That's probably a good sell. That's probably something you're looking at and you're thinking to yourself. And the people even at 94 were probably thinking that too. Like, are we gonna trade more than 4.5 million every 2 minutes? Maybe once, but is that gonna offer any fruit? Is that gonna give buyers another leg up? We have no news. This is a $17 million company. Well, I say $17 million company, but $17 million company at 53 cents. Okay, meaning that if it's at 25%, 25 cents, then it's half the value, right? So like this thing went from 30 cents to $1, so it 3x basically. So if it started at a $10 million company, now it's a $30 million company, and now it's a fucking $20 million company, right? Like market cap fluctuates, but market cap is a good general idea of how much weight and how much volume, how much efficiency you need to move forward, right? And still the same idea of more volume on your breakouts, controlled pressure down, like opportunistic contextual movements up. Um, yeah, but we were discussing either earlier though, test your high, try to break your new high, can't break it, test your low, try to break out from the low, can't do it with less volume, and then boom, losing your volume, pushing down, testing your low, coming down again, 500k. Like look here, we go from 1 million to 1.5. We lost price, but we traded more volume, and we're only up 30%. Okay, leads to a breakout. Okay, 1.25 down 11%. Let's remember this moved 5% down, maybe 6% down from its high. That's not much, and it traded more volume. And it's trading 1.5 million in 2 minutes. So 15% in 2 minutes. Or a little less than 15%, but still a lot of volume very quickly. On track to trade your float very quickly. On track to move more volume very quickly. And 1.7 million volume to 17%, right? So it's like 1.5 million. What's the difference between this candlestick and this candlestick? Well, this candlestick was loaded and this candlestick was the movement up, right? Like they both traded about the same amount of volume, but this one moved 1%, this one moved 17%, right? So it's like it's more about where the volume is being trading and why people are trading it, because everyone bought here because they knew there's a high probability that like we're safe at this level. We're going to trade more volume, And if I hold for like if you held this for from 1516 to 1544, just 30 minutes about, you're making a fucking shitload of money, You're making a very good trade. So, and what you're also doing when you're buying this, you're giving the market confidence. When it's being bought, the market is gaining confidence, right? And everyone down here, everyone who bought earlier before you, is actually more inclined to hold their position, right? More inclined to hold the position for the aspect of potential future movement, right? Like a boom. Now I'm even more inclined to hold my position, more inclined to hold my position, right? Like from here, you might want to start selling, but there's still very positive rotation. Get your reset, and then even from here, from 75, like you can risk at 59. Even risking at like where you want to sell. Say I bought in at the top of 53. Worst comes to worst, I sell here at 59. Once if we do retest, if this thing were to come here, right, and then not be able to save itself and just die from this 56, like from 59, a purchase at 50 to 59 is 50 to 60 is still a solid trade. It's still 20%. It's 20%. Like if you make 20% every day on $1,000 and then move your account slowly, like you're gonna compound within the next 100 days of doing that. Like you're going to make shitloads of fucking money. You get to 1 million in a minute, right? Like or 100 days or whatever, or less than that, honestly. Like 20% is nothing to be fucking playing around about. Everyone wants that 100%, everyone wants that 80%, everyone wants that 150, that 140, but the truth of the matter is none of that happens without this thing moving 20%, moving efficiently, and this is 22% in 2 fucking minutes. In 120 seconds, everyone decided, the market decided we're going to move forward and we're slowly going to inch in and buy in this position, okay? Same idea. Make a high, test the high. 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 Make a low, testing your previous high. Well, technically, would be down to this high now. Um, Confirm. Try to break out with more volume. Can't do much from here. Like this breakout with more volume. What's the difference between this breakout with more volume and this breakout with more volume? Right? Well, the difference is we had more indecision here, and we're up 100, 200% by now. Like up 200% with no news. 7.2 million volume. Trading 50% of our float in fucking 2 minutes. Need to trade more to move up. You're not gonna fucking do that. It doesn't. Or it can do that. It can do that. Don't let me say that, my bad. It can do that, but it doesn't. That's the discrepancy. And if you bought in, say, at the 41, held your way through to the 102, now you're thinking to yourself, okay, 86. If 86 cannot be held, I'm selling. 86 is held. Well, kind of dips down a little bit, but it does hold. Okay? But we clear out. Don't give much of a discount. You know, I mean, not terrible, from 90 to 80, right? Or $100 to 80. So we do give a discount, about 20%. People eat it up. They get that back, that 16%. That's huge. That's huge. You could have missed this entire thing and still made 16%. You could have missed 200% move and still made 16% had you been aware. Though you must be very intelligent in the idea that knowing that this 16% is not a long live. It's not something you can invest in for more than literally 2 minutes. Literally 2 minutes. Because within 2 minutes, if you even had bought at the low here, even if you bought the open at the close of this candle at 84, in 2 fucking minutes, it's literally right back to 86. You made no money, and now you have a shit ton of weight to be worrying about. Boom. Low, 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 low. Break your previous high, and just can't do anything, right? Okay. Now, let's move to the 1 minute. The 1 minute. The beautiful Mr. 1 minute. Okay. Let's see what we got. Okay. 6%, 32K. 0.52%, 18K. 9% on 101,000. Okay. 9% on 101,000. So we 5x'd our volume, moved up 9%. It's pretty efficient. 170K, 375K, 512K, 19%, 800K, 633K, negative 10%, 491%K. Testing this previous high. Do we want to be here? 571,000 volume, 700,000 volume, 700,000 volume, 400,000 volume, 1.2 million. Do we want to be here? 1.9 million. Do we want to be here? 1.1 million. 1.9 million. Do we want to be here? Test your previous high. 1.4. Do we want to be here? 2.4. Okay. Do we want to be here? 2 million. Okay. Do we want to be here? 500K. That's probably your haul. I think that's where your haul is. Okay. Do we want to be here? 2.2 million. Okay. Now at 95. You don't want to buy that break. You want to test it. And test probably pretty much this high too. We didn't really make a low. We didn't make a low from going from 59 to 95. We didn't make a low. So we're going to be testing where we made our previous low, where we broke out from, which is 65, which is literally right here, where we come here, make a low, break it, push up, push up, push up, get your sell again. I mean, this here breaks again, testing this previous high, break again. Now break right through, completely swashbuckle this level right here. So now you're looking at this previous level here, 63. Now we hold, boom, 8% chunk, 11% chunk, 11% chunk. Now down. It's like this is a little bit too quick for the market, right? A little bit too quick. Now we're 84. I don't know if I want to buy 84. I'm not trusting completely. Now we get a little bit of our sell. We get a little bit of a washout. Do we want to be here? Do we want to be here? Another 1.6 million volume. Okay, so we're still in here. Okay, looking to break out. Now you're a little bit safe. Now it's 73. You can risk your break of your previous high, which would be 73, right? Like, we test this high at 63. We break to 74. Now 74 is your new high, okay? We break again to 82, okay? So now you're going to be testing 76. You go and test 76. You influx with volume. Now we're looking to break here, 84. Break 84, okay? Do we want to be here? 1.5 million shares compressed into this one position. And then boom, there it is, 3.8 million. Okay, from here, do we want to buy? Are we going to trade more than 3.8 million And are we going to be, is there going to be a reason for us to move forward? And then if we do, since we broke this, we're going to be looking at 95 as an entry, right? Or to see what we break from. And honestly, 87 would be your ideal entry if it does from your previous break to retest. And here, 89, we come down to we literally come down to 89 in this candle. We literally come down right here. Like it literally comes, like it does the same thing. Makes a fucking high, test the high. Makes a high, test the high. No, it makes a high, test the high, breaks out from its previous high, right? So we break out. This is your previous low. You come down to it, okay? Now from your previous high, was previously here, we fill in, okay? And this volume confirmation, if people want to be in here, if it's not as too much of a discount, if it's not too much of a drag, if there's enough volume rotation to be pushing in, we're gonna break out again, okay? Now recycle the same exact fucking thing, the same exact fucking thing. Are we going to make a new high? Okay. Are we going to test our previous low? Right? These are the ideas. How much volume are we trading? From here, now this is your high. Now you want to be in at 97, right? But now you lose a lot of volume. And you're up 200%. And like we said earlier, like we just come down here, break this high, disrespect these levels. 1.8 million still in, but we still have that, like these breakouts. Like they go from breaking out from our previous high 28%, okay, from our previous high to our new low, to our new high 30%, okay, from here breaking out again. Now the market makes 40%, okay, now to your new high, now 17% at the top, right? You see that we slowly lose efficiency in our traded volume, leading to an exit, okay? Come down. So here's your high. Don't get as much fruit. Trade all your volume. Everyone's in at the same position. It's too crowded. Go to test this low. Kind of respect it. Make 8%. Like 8% still no joke, bro. You made 8% every day for 220 days, starting with $1,000 and recycled. Say you made 8%, so now I'm at $1,080, right? And then the next day you trade, made 8%. Now I'm at 1,140. By 100, 200 days of doing that, like, which is literally a fucking year, you'd be at $1 million. Like, what are we talking about here? 8% is huge. 8% is something to be respecting. Okay, buying that retest of 80. To sell back to the previous high of 104, or to sell the breakout, but the breakout's probably not likely. So I wouldn't even advise this. I would think something around here would be impressive, would be ideal, obviously. Even something maybe here is ideal because you're testing this previous high and you're still rotating in and people are efficient and you just got a big discount and you're still showing that you want to be here and you just recycled again. You're still showing that you want to be here. You're still showing that you want to be here, showing that you want to be here, showing that you want to be here. And then now we're slowly exiting. Now we can't break out. Now we go to test our previous high. Now we dip past our previous high with expansive selling volume. Like selling volume goes from 1.5 million, 1.9 million to 1.2 million to 2.1 million. If that's not selling volume and you don't see that, that's a problem, okay? Especially being up 200%. Like it's different when it's only up 40% and then it starts happening and you like maybe you didn't understand the play, you didn't understand the rotation mechanics that were needed to be in place, but this is a good definition of what a real rotational movement is, all right? Like a lot of times people will see 30% and then the stocks will play and hang on 30% and people like me will especially back in the day making mistakes, and even now like they'll put too much thought into these things that don't move efficiently. Like this is moving 13% in 1 minute, right? 12% in 1 minute, 12% in 1 minute, 10% in 1 minute. That's opportunity. Okay? You move 10% in 7 hours. No one gives a fuck. No one wants to be like why why would I want to trade that? It doesn't make any fucking sense. Okay? Here we go. Now going to test this previous now. Can't push past this high. Still losing volume. Still sort of rotating, but rotating out. Come here, 82, right? Big push, everyone wants to be in there 22% real quick, and then another minute goes by and then we're still at the same position. Hard sell volume, another just devastating selling thing. Like this is like going to test your previous high. Like what even was your previous high? It's fucking 83. So it's like you buy the break at 22, or no, so like it breaks and you're like, okay, let's retest this previous high, and it comes 1.3 million sell volume, 638k sell volume, and now like your next candle is 600k, like 600k after trading all this, being up 200%, like that's fucking like that's just That's terrible. You're losing your volume. You're losing volume. You see here, we went from an average of about, let's say it's 1.6 million, to now to here to an average of about 700K, to now to here to about an average of 300K, to now to here at about an average of like 100K, 200K, to now to here about an average of like 70K, and then to here at an average of like 6K a minute, right? Like, and then you get a little bump, still like one, like dude, like you're just losing volume. Notice this, right? Like, and then you see here, like when you go to test your previous high, you trade 600K. Like when we went to test our previous high here, and we came back, like from trading 800K, we're still here at 500K, right? We're still fresh with volume. I mean, it seems like it's the same amount of numbers, but it's a different contextual space. And first of all, we didn't lose that much money, like 2% time. I mean, we did lose 12%, but not literally in 1 minute. And this makes sense because it moved up 19% in 1 minute. Like, and then we settle down, and then we come up, settle, come up, settle, come up. If we push more volume, right? That's the idea. Let's move to the 30-second chart. Let's move to the 30-second chart. Let's see how this thing gets, because you want to be efficient with your entries. You want to be trading these. You want to be really noticing like what's happening every second. This is a way to do it. Okay. So on the 30-second chart, it gets harder, but it gets way more understandable in the idea, and you see it way sharper, and you see it way more many times, a lot more times. Is the literally the same pattern I was just telling you. This is the break, the test, the break. Okay, right? Like from here, if we go to the 4 hour chart, go to the 4 hour, zoom out, right? Especially if you get confused, we have one big green candle and one big red candle. 2 hour, two big green candles, two red candles. The 1 hour, two, and then four. 30-minute, 1, 2, 3, and then 1, 2, 3. Okay. 20 minutes, still two big green candles. 10-minute. Now, oh, whoa, out of nowhere. From the 4 hour to the 20-minute, we had two. To the 10-minute, now we have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, and then okay. Now let's go to the 5-minute. Okay. 1, 2, red. Now we're seeing our reds. I have it as yellow, but it's red. Or sell volume, okay? 1, 2, sell. 1, 2, sell. 1, 2, 3, sell, 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 right? Okay. Or no, 1, 2, sell. 1, 2, sell. 1, 2, 3, sell. 1, 1 buy, 1 sell. 1 buy, 1 sell, 1 sell. 1 buy, 1 sell, 1 buy, 1 sell, 1 sell, right? Let's go to the 3-minute. Okay. See if it's okay. 1, 2, 3, 1 sell, compress. 1, 2, 3, 1 sell, 1 buy, compress. 1 buy, 1 compress, 1 sell, 1 buy, 1 compress, or 1 sell, 1 compress, 1 sell, 1 buy, compress, sell. Okay, and then obviously contextual stuff we just been talking about. You're at the top. Now we're seeing the 2-minutes, still the same thing, but now 1, 2, 3, 2 sells, 2 sell, sell, and a compress. 1, 2, 3, 4, 5, sell, sell, 1, 1, sell, 1 buy. So 1 buy, 1 sell, 1, 2, 3, 1, 2, 1, 2, 1, 2, 3, 4, 1, 1, 2, 3, 4, 5, 6, 7. Right? Go back to the 30-second. Let's go back to the 30-second. Let's see this nuance. Let's see this nuance. It's very important nuance. Okay. We push up 7%. Even 7% will be tested. Even 7%. Okay? Very important. What this is confirmation, like showing stability, and people are rotating in, right? Like 7% of 50K, now another 50K, like 50,000 volume, okay? This does not mean 50,000 people bought. This means 50,000 shares were traded. Price will reflect what's happening, okay? And it's not like an even ratio. It's not like, okay, since we moved down 0.74%, that means that 50% of the 50% of the 50K bought and 50% of the 50K sold, or like a tiny little 0.74% nuance, right? It's like if we move up 13% on 16% on 259,000 volume, that doesn't mean that 65% of the people bought in that area and then 45% of the people sold, because stocks don't move linearly. They don't move linearly. They move in the terms of like market liquidity and market makers. Like the market makers, like the people behind these stocks, the people who hold the liquidity for these stocks for them to move up higher. They have price ranges. Like if it breaks a level of say $1, and it's never been past $1 ever before, Now the market makers, like the share spread starts getting higher and higher and higher. Like eventually it's just going to start skyrocketing up like slow. I don't know exactly why. I think it's just because there's no shares at those prices before. So when you influx a bunch of volume, I think the market makers like, I don't know exactly the percentages that they move, but it's not a linear 50-50 even. But what you do see is though 250,000 volume on 16%, meaning that like it's a very healthy forward movement. Okay, so, but from here, like you can't even tell, like from 32 to 39 to 40, which is 30%. Actually, it's one third, 33%. 33. This is like this right here is a 33% movement. If you bought from 30, does that look like 33%? No, it looks like fucking 6%. And not until you zoom out and you start adding them up. Like okay, well 5%. Okay, and then 7, and then you get 2.5%, so 7%. Now 7%, so 14%. A little bit of a sell. Now this is 2.46. Add 1%, so now we're 15%, and now we're at Remember, it's not linear either. Like when you're adding these up, so 15, 14% actually equates to like 30% from the base, right? Like it's a linear thing. No, it's an exponential thing. Um, but the beauty of the nuance is what I was trying to show is that when you make this high, breaking this previous high, and even here, make a high. This is your previous high. Come down, test that previous high. Literally tested this, right? And then pushed up. Try to breaks out. Okay, smashes past your previous high, but then breaks out and remains and holds it, and now looks to break again. Boom, boom. Like if you're a rookie trader, you could have gotten stopped at this 161. Like oh damn, we just went down 6%, and then we just a huge amount of sell volume. But really, like you gotta think like all these people in here who are making money, right? Like this 122,000 shares to move the price up 3%, like, and then it goes down 6% immediately. Like people want to sell, people are scared, people don't know what they're doing sometimes, right? And then again, people rotate right back into it. 6%, 130, they see that discount. Okay, now testing this previous high and trading, looking at no, slowly starting to trade more volume. Now compression at this high, trading more volume, push up, and the whole idea is make a high, test your previous high, rotate in more volume, rotate in hard more volume, a lot more volume. 300K, 700, 800K. Double your volume, triple your volume. Okay? On the sell, we don't want to see expansive, explosive sell volume like hard, but we do want to see controlled selling. Okay? Controlled selling allowing new people to rotate in with opportunistic advantage. As in, if we went up from 43 to 80 or 160 immediately, like, dude, that's got to go down, bro. Like, no one's going to buy that. But if we go up 12% and another 12%, and then we linger and we move up another 12%, and then we come back down to a base where now you just saw you can make 12%, from this level, and you're trading a ton of volume, and you're very compressed, and even in this candle, you're going to see it slowly start to tick up. Beautiful. So make your high, test your high. 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 Make your high, don't even test, just push up again. And then break down. Now to this previous high. And now this technically is your low. So move up, make your high, test your previous high. Make your high, test your previous high. Make a high, test your previous high. Don't even need to. Now looking to break out, expansive, explosive volume, and this play right here, like even from 81 to $1, like that's fucking beautiful, dude. That's fucking amazing. Like, boom, 500K, 1.1 million, 1.4 million, 1.5, 1 million, 1.3 million, 1.1 million, now 900K, 700K, 300K, 400K, 800K. Are we losing volume? Ding, 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 ding. Answer is yes. Did we lose volume? Yeah, we lost a lot of volume. And we broke 1, 2, 3, 4 levels of highs. That's not stability. That's not continuation. That's a big negative movement. But it's still contained. It's still a lot of people, right? No one's just gonna, like the 8 million or the 50% flow, the 50% of the entire stock's not just gonna rip down to fucking 20 out of nowhere. Like it's gonna slowly leave. Like everyone's slowly gonna realize like, oh wait, opportunity's over. Everyone who bought in at 102 is like hanging on for dear life at this point. They don't know Like, like this isn't opportunistic as this was, as this was, as even this was, right? Make your high, or don't make your high, but make a high, test it, try to test your previous low, make another one, kind of coming back to test this one, breaking through it, breaking through it, breaking through it. Now coming to test your low, losing your volume, expansive sell volume. Just can't do anything at these tops here. You get that pity rip, you know, that 21% in 30 seconds actually, which is probably even less time in real time. You know, unless you bought at the absolute close here and put yourself into a position where you want to have like a 0.3% risk. You know, to make maybe even to see that would be hard, and then slowly have a low, break your low, go to test. Don't even need to test. Just lose. Like look at this. Look at this response. Look at this response. Like we go from 200K, 200K, 84K, 200K, 184, 196, 200K to now it's time to buy. Now it's time to now we're pushing back up 57K, 60K, 80K, and now boom, hard sell 5%. You know, it took you 100, it took you 90 seconds to move up 4%, and it took you 30 seconds to move back down 5% with even less volume. Like that's just a terrible play for the buyers to buy in at that position, unless obviously like you're a fucking genius and this thing has a contract to push in later in the day, but it just won't, right? These are your ideas. Now, were we in the 15-second chart or the 30-second? I can't remember. Let's go to the 15-second. Let's see the 15-second. Ooh, now we see a little bit more detail. A little bit more detail here. And, you know, like on the 15-second chart, like this is a movement, man. Hard push. Hard volume flux-in. Oh my God. Look at that. Oh my God. Look how much volume comes in at this level right here. And oh, look at, is that a 6% risk level? Ooh, is that a new is that a high we can test off of right there? Ooh, do we not do anything for the past week? Ooh, are we on pace to rotate our float like 3 times in like maybe 4 hours or so, even like an hour and a half, 2 hours? Or, holy shit! And then ooh, look at that. That's a 5% break. And once we break, everyone's like, okay, now it's time. Now it's time. We broke. We broke. Game's on. Okay, game is on. We broke. Okay, 128K. Now volume gets a little bit crowded. I'm like, okay, still test that previous high. We break that new high. Now going down and test a new high. Losing sell volume. Losing volume on our sell. Expansive. Still selling. Still selling. 38K. 71K. Everyone who wanted to be out of this position slowly gotten out. Now we're coming back off our previous high with heavy volume. Boom, boom. You can buy here. You can buy right here. This doesn't look like 100% right now, but 10% in 15 seconds. You know, like the sky is the limit here, especially with the 38 risk. And it literally does go to 38. Like if you see this, and then it swarms and it does this, you're like, oh, damn it, I missed the play. You're gonna test your previous high anyways, and this is where you broke out from. So I wanna be in it here. That's why we see no one even get in. Everyone just sells here. Okay, now it's time to take profit because opportunistically wise, like who's gonna buy a 39 to 50, like a 40 to 50? So it's like, so what you do is you take the difference between 40 and 50, which is 10, and you divide it by your original number, which is 40. So you divide your original number, or yeah, you divide it by your original number. So 10 divided by 40, which is like what, 1/4? Yes, 1/4. So 25%. So after moving up 25, you want to buy a 25% premium, um, and not test your previous high. No. So what we get this movement forward. Now we're coming back down, test the low, test the low, come in with volume, and still like this whole compression series, like from this idea of 43 to even just this whole thing is basically flat, and it's flat with continuous volume. And now you get your breakout of 331K. Okay, do people buy into this? They do. It's a compression. People want to sell because, you know, people who were in here earlier, people don't know exactly what's going to happen. They want to sell a little bit. They're a little bit scared. You don't know exactly what's happening with their rotation. But what you do know is you have a clear risk at 43. You also have a clear risk at 50. Understanding that that's your new high, that's your previous high, and that's where you want to test from. And you kind of do 50, 53. Right? Now you break out. Now, especially as you balloon 149K and balloon towards your previous high again. Like it's just more opportunity for people to make another 10%, another 12%, and that happens. And now you go to test, and then you break out again, right? Lose your sell volume a little bit, still, but like you lose your sell volume and you only sell like 5%. And this one sells like a little bit more just because it's a little bit earlier, right? And you're gonna see this happen the entire time. Boom, 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 boom. See, like boom, like look, didn't even really get a chance to test your previous high. You did, but you didn't. You're not always gonna exactly touch it, and it's probably not the healthiest thing to always contract to your previous high. Like you want to hold a little bit of like a 1 to 2 to 5% premium. You even see a 25% premium where something will go up 100%, only go down 75%. But really, it does math out in the way that you would think to where test your previous high, and the idea that you break a high, then you go to break the other high, you break the other high, like on a smaller scale, a more segmented, a more granular scale, you'll see that these levels are understandable. And then you just get this stuff, break, get your halt, test your high, make a new high, go to test your previous high, break down, so now this is your previous high, right? Break down again, now this is your previous high, hard hit. Look at this. Like, what you could see is this. And you'd be like, damn, now I don't have time. I missed it. Damn. That 15 seconds of 250K compression, damn, I missed it. And then it went up 10%, damn, I missed it. Like, but people are still playing for the break of 89. But the smart person is going to be playing for the confirmation of 75 hold. We get that. We get the 75 hold. And then we push up towards our 89 or 83, right? Boom, 400K to push up. More selling. And then slowly controlled 3%, 2%, 3%, 2%, 6%, right? But the difference between this movement and this movement is speed. And by the time you get to here, 800K every 15 seconds. 800K, which is, did I do that right? Yeah. 3.2 million in a minute, which is, in 6 minutes you're going to trade your whole float. Now you got to trade more than 800K a minute to go higher. We don't get that, right? Test your previous high, losing volume. Boom. Coming in here. Yeah. Trade breakdown. Okay. Now, go to 5 second. 5 second chart. Looks a little weird. Looks alien. Doesn't look the same as the 4-hour chart, the pretty 4-hour chart, right? It looks alien. It looks, but it's the same idea. It's the same idea. It's influx of volume. Breakout. Even from 30 to 40, people are going to be noticing this. Breakout. More people are noticing this. Retest. Okay. Test your previous high. Come back in with volume. Okay. Now we're at a stable structure here. Now this is a stable level. Now you have a risk at 38, and you're only at 41. This thing already moved 40%, and it's on track to trade a lot of money. Things to be having in your head. Come to break down and test that again. Break out hard. Break out past your previous level. Now, look at this. Look at this right here. Test for 10 seconds. And then big volume. Big volume. Big push. Now we're going to test this 52 level. We literally touch 52. Literally touch 52. Okay? Get your sell volume, and it's controlled. This is still controlled. Look at selling 4%, sideways. Selling 4%, sideways. Selling 5 to 3, 8%. Now, get your 5% reclaimed to your previous high. Great risk reward. More volume influx, sideways. Slowly pushing up, filling in a little bit in with more volume, a little bit, not as much pressure, but still volume. Selling 7%, sideways. Coming back in with volume. Now, you have a big collection of people in here. A big, or not a huge one, but enough volume to be noticeable and enough volume to allow for a movement upwards. Then you get your 8% in 5 seconds. 8% in 5 seconds. If you make 8% a day, You could be trading. You could you can make $1 million theoretically trading for 5 seconds a day. Like, like that's crazy, bro. 5 seconds, 5 second, 8%, 1%, 1%, 75K, 2%, nothing, 126%. Are people rotating in? You know, do I have a clear risk level? I do. Is it close to me? It is. Do we have a lot of volume? Are we trading more volume? We are. We get expansion. We hold our level. Okay? We sell down to our previous high, finish our selling. Now we're coming back in. Like, and you don't even have to buy these sells or even buy this retest at this high. You can wait for the breakout of 57. Okay? And people do. And people are probably buying here expecting a breakout. We get a little bit of a sell. 14K, 150K, still compressed, still have a good level at 54. 54 gets picked up, pushed into at 64, same game. And then over time, you look like this doesn't look as opportunistic as the other ones. The 10-minute chart, like it moves vertically, but it moves vertically on a period of time that is longer than you would expect, right? But what you're really doing is it's the same math. It's making a high, testing the high. Okay, now we're making a new high. Like every time a new high is being made, people they're going to sell into it. You know, like you gotta think everyone has made money. They're selling into it. Like when you're buying here at 103, you have to ask yourself who has made money on this play. Okay, every single human being who was in before you has made money on the play. Okay, now you ask yourself, do we have a good level to test from, and are we going to trade more volume to expansively move? Do we have a reason? From this position, you don't, and you don't trade more volume. And you get to this level, even here, to recognize this as your entry to make 20%. This is your entry, because you're not gonna see the whole chart at once. You want to make 20%, go from 82 to $1. You have to recognize this right here, this candle. At the end of this candle, you have to buy immediately. You immediately lose price. And then if you want to make 5%, 7%, you have to buy here. You have to buy here. You have to buy here. After all this, right? You have to buy here. People do. Then it bears a little bit of fruit, comes back to test this high. Slowly push up again. From here, you're not trading the same volume you traded here, right? Look at this. Look at these peaks. Look at these peaks. Look at these peaks. Big peak here. And now we're just dead, right? It's the 5-second chart. Okay. This was a breakdown of SCAG. Okay. On the 1-minute chart, it looks like this: breakout, breakout, compress, breakout, sell, find your high, breakout, 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 compress, breakout, find your previous high, breakout, breakout, find your previous high, breakout, breakout, previous high, breakout, previous high, breakout, sell, sell, sell. Still test your previous high, previous high, previous high. Rip through it. Oh, compress, push, compress, push. 5%. 5% is your fruit. On 2 million shares, 5%. Nothing. Okay, so 19%, 853K. You have your inverse. You don't trade 19% of your float, which would be, I don't even know what that is. Fucking, what's 20% of 20 million, which is 4 million volume or something like that. I can't remember, but you trade a million volume and you move 19%. 1 out of 20 is 5%. You move 20%, so that's an inverse reaction. Okay, people think it may be a little light, and they're gonna come and test this here. This is your buy. This is your buy. This right here is your buy. Okay, or this could be your buy as well. And then the patience to understand that if you trade more volume and you slowly retest and retest and retest, you're going to have a good flux to move up to a position like this. Okay, that's the idea. 1.2, 1.9, 1.1, 12%, 1.9, 1.4, 2.4, 2.0, 500K, 2.2, 2.4, 1.3, 800K, 2.2, 1.5, 1.6, 1.7, 1.5, 3.8, from 3.8, 3.3, 3.8, 3.3, you're not trading more than 3.8, 3.3 from here, you know? If you do, then even past that, you're not going to trade much more. So on the 1 minute, it's very observable, but you can break it down as much as you want. You can look at it as much as you want, but you really have to know that, like, you know, like, and you could have waited first 20 minutes and then still made 44%, you know? It's like, and even more than 44% to 108 if you're good enough to get it to that, if you know, to hold to that point. 86%, 86% in 40 minutes, 86% in 40 minutes. 86%. Thank you.